Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1235A, and today's date is March 22nd, 2017, and the title of the episode is The Corporate Media Flip-Flops on the Economy, Retail Apocalypse is Here, Crisis Around the Corner. Let's get into the economic collapse financial news. Now, yesterday we talked about the market, and it was down 200 points. Today it was down, it was up a little bit, it looks like it closed down. And we talked about the chaos in the market. And when we talk about chaos, when we talk about the volatility of the market and how things are reversing now, it doesn't mean the market's going to come down tomorrow. We're going to see fluctuations in the market moving forward. Yes, are we going to have days up? We're going to also have days that are down, which shows us that things are rapidly deteriorating very quickly. Because in the past, we just saw the market rise, and that was it. What we're seeing now is that these huge investors, these individuals, these institutional investors, the insiders, they are dumping their stock right now. They want retail investors to pick up the slack here. They're getting out of the markets. And we can see right now the only way to pump up the markets is with free money from the Fed, using the high-frequency traders to keep the trading going. And what we're seeing is a complete breakdown. And as we move forward, we're going to see this chaos continue. And we're already seeing the entire system. And when we look at the entire system, we're looking at many different economic indicators. We're looking at housing. We're looking at GDP. We're looking at retail. We're looking at unemployment. We're looking at corporate defaults. We're looking at the auto loan industry. We're looking at manufacturing. We're looking at many different areas. And one thing that's been in focus for quite a while is we've been tracking how retail has been contracting. And I remember first reporting about this, and people were laughing and saying that's ridiculous. Retail is not contracting. People aren't losing jobs. And as we move forward, it just got worse and worse. The same thing with housing, where in the beginning, people were like, oh, it's perfectly fine in my area. And yes, there's still going to be areas where it's still fine. But what happens is each area gets hit at different time periods. And people have been emailing me like crazy from all over the country saying that things are dramatically changing in the real estate market. But in retail, we can see right now that this is a complete disaster. I mean, Sears right now, which we knew, they're not going to be able to continue any longer. And we're seeing that many stores are starting to close down. But what's more interesting is that the corporate media, they are starting to realize and they're starting to report on how the retail industry is not doing well. Yes, they did it in the past, but they used to say, well, everything's moving to online. That's what explains it. Oh, the weather is bad. Remember all these things? It was snowing, it was rainy, it was foggy, it was sunny, and they used all these excuses going forward. Why we said no, it's because people are losing jobs continually. They don't have the extra funds to go out and purchase the goods. And we looked at online, and online didn't take up the slack. So all of what they were saying was completely fake, phony, and false. Now the corporate media is out there saying that the retail apocalypse has officially descended on America. Really? Well, remember what I said many reports ago. The corporate media is going to let us know when the economy, coming from the deep state, coming from the central bank, when the economy is going to start breaking down. They're going to show that the economy is not doing as well as they were all saying. And they've already started this. Now they've come out with this information that all of a sudden things aren't going as well. And they're saying that thousands of mall-based stores, well, they're shutting down in what's fast becoming one of the biggest waves of retail closures in decades. They're saying more than 3,500 stores are expected to close in the next couple of months. Stores like JCPenney, Macy's, Sears, Kmart, and many others. We also have middle-of-the-mall chains like Crocs, BCBG, Abercrombie, Fitch, and Guess. These stores are going to be closing down. And what they're saying is that the number of retail stores closing in early 2017 are as follows. Payless, 1,000 stores. Radio Shack, 552. The Limited, 250 stores. Family Christian, 240 stores. Wet Seal, 171. BB, 170. Crocs, 160. JCPenney, 138. BCBG, 120. American Apparel, 110. And it goes on. And what we're seeing right now is that stores are closing. Now, think about it. If all these stores are closing, where are all these people going to get work? Where do they go? Now, it doesn't really affect the unemployment numbers, especially those people who are working part-time, and it varies from state to state because it all depends on how many hours they work and how many, what their dollar amount is that they're earning. And remember how the whole thing works. As they lose their jobs, they're considered part-time. If they're not getting those hours and not getting the dollar amount, they're not counted. They're not eligible for unemployment insurance. But when they got the job, they were counted as a full-time job. So you can see how this whole thing works. You can see how the numbers are skewed, manipulated. And this is what we're seeing right now. We're going to see thousands and thousands of people that are going to be laid off. Now remember, when all these stores close, how do they count the sales, the retail sales? Do they just say, okay, these stores closed in the beginning of 2017. We have 500 stores from this place. The sales just come to a screeching halt. They go down to zero. No, they extrapolated out over the year and they slowly remove the sales from each store so it doesn't hit too hard in the economy. Now, it hits hard in the real economy. In their fake, phony, and false numbers, it makes everyone feel good. But it's not real. It's fake. So we're seeing the corporate media, they're already doing what we thought they were going to do. They're starting to prove that the economy is falling apart. Now, we knew this for a very long time. We're seeing it all over the place. And this is going to get worse. It's not going to get better. It's going to get worse. Things are deteriorating very, very quickly right now. And what they just reported on, this is the number of stores that are closing in early 2017. We're not even talking about the next half of 2017 because there's going to be more store closures. We see the auto industry. Well, this is a complete mess right now. The National Association of Auto Dealers, well, they reported an anomaly, dropping used vehicle prices in February, which occurred only for the second time in the past 20 years. It was a big one. Its used car guide seasonally adjusted used vehicle price index plunged 3.8% from January, by far the worst recorded for any month since November of 2008. And that was because of a recession, which tumbled by 5.6%, which we're pretty darn close. And we're supposed to be in this incredible recovery, which we're not. Now, the index has now dropped 8 months in a row and hit the lowest level since September of 2010. The index is down 8% year over year and down 13% from its peak in 2014. And the price decline spanned all segments. And we look at the luxury car market, we see that it has come down negative 3.1%. Subcompact car, negative 2.1%, large SUV, negative 1.9%, and so on and so on. And we are seeing a surge in new vehicle incentive spending. Now, the question is, why are we seeing this? Well, because automakers right now, they're drowning in unsold inventories on dealer lots, and they are desperate to move these vehicles off the lot. So they're continually getting more and more incentives, and we've seen this back in 2008. Now, in the housing industry, well, things are not going well. Things are actually getting worse right now. And as we know, the Fed has raised interest rates by another 25 basis points, and we can see the end of 2015, as soon as Trump was elected, they raised rates. Now they raised rates once again, and we can see that rates for mortgages, they're continually moving up. Applications are going down. And we see existing home sales slid in February 3.7%. Of course, they expected only a 2.0% fall, but it was a lot more than that. Existing condominium and co-op sales, well, they descended by 9.2%. And finally, judging by the collapse in mortgage apps and rising mortgage rates, unless there's all cash buyers, we're going to see the housing market decline further. And we're already seeing prices, they are coming down. We're seeing houses on the market longer and longer. Just go on to Zillow. Take a look around. You will see houses have been on the market for a very long time, and they're continually lowering their prices. Traffic is not what it used to be, and this is what happened back in 2008. And what we're looking at right now, and the corporate media is starting to tell us that the economy is starting to fall apart. I mean, they use the word retail apocalypse. I mean, that's something that I would use, which I have in another report, but other individuals have used that also. But we can see the corporate media, they're trying to get the word out there that since Trump is in office, they've already started it, the economy is going to start to fail. And as we go throughout this year, throughout the summer, we're going to see the Fed out there. They're going to be talking about how the economy is still strong, but starting to weaken even further. So we're going to have to raise interest rates. Think about it. Janet Yellen was out there telling us that she's very disappointed in the economy. The economy wasn't as strong as she thought it was going to be, and she decided to raise interest rates. During Obama's term, she told us that the economy was doing very well. It was very strong. Actually, the unemployment was even lower at that point in time. And she didn't want to raise interest rates. And if you really look at it, right after Trump became elected, she raised the interest rates in December. And then she also raised it right after he was inaugurated. So he was already the president after he was elected, not officially, but the transition was happening. So just in this little time span of where he has been the president, the interest rate has been increased twice already compared to Obama. So think about what they're doing right now. And we know that the Atlanta Fed is continually coming out telling us the GDP is like 0.9%. And we can see retail is contracting. And they're thinking about raising the interest rates once again. And we're going to see mortgage applications. We're going to see housing prices drop. We're going to see traffic dry up. Investors are going to be getting out of the market. Things are going to rapidly change right in front of our eyes. And they're going to start pointing fingers. They're going to say it's because of the economic policies that Trump is putting forth. They're going to say this is really it's really taking a toll on the economy. And they're going to continually do this. They're going to play it up, just like they played up the Russian hacking, which was not true. Just like they played up the hacking of the DNC, which was not true. Just like they played up that Trump was not wiretapped, which was not true. And they're going to continually do this until the very end, where they're going to blame what is happening on him. Because the Fed definitely does not want to be blamed. The Fed needs to redirect all eyes to someplace else, because they know, and they knew this for a very long time, they knew all of this could not be sustained. And Trump knows that this cannot be sustained. They know that the economy is dead in the water. That's why he came out and said the economy is a mess. He knows what's going on. If he just comes out to the people and say, hey, listen, the economy is a complete disaster, first of all, the corporate media will jump all over him. And many of the people won't believe it. And the Fed will come out and deny all of it. So he has to do it in a certain way. Now, it is a race to see who brings this system down and how this goes. Because if Trump does bring it down, and he has the ability to blame it on the Fed, if he takes this course of action, it would be the first step in getting rid of the Fed or taking control of the Fed. If the Fed brings down the economy before Trump and blames it on Trump, well, the Fed then will try to reset the entire system into what they want. So right now, what I'm looking at is there's a race right now in who's going to bring down the system. We end up in the same place where the people lose out, where the people go through a very tough time, where the people have to just try to survive on their own. But it all depends on who's going to bring us out of this, what system we're going to be under, and how we all are going to survive moving forward. And this is why you need to be prepared for that transition period, no matter who wins out here, because it's going to be a rough couple of months, maybe years. Cliff High saying it's going to last 5 years. So you need to be ready and prepared for what is coming. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.